Hello, this is Alex Kazmark for the FXEdge.com, and this is the free daily Forex video for September 11th, 2009. One reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. As trading conditions are always changing, make sure to watch Monday's video to stay updated. Okay, traders, ahead of the weekend, the majors have consolidated across the board. Equity markets keep climbing ever so slowly, however, they are still going higher. At this point, our thoughts are that traders are beginning to pause and weigh the outlook for future monetary policy across the G7, specifically the UK, EU, and the US. Interest rates overnight remained at their current levels in the UK, which are currently set at 0.5%, and they remained to keep their asset purchase facility at $175 billion. That information gave a boost to the pound, which rallied but later consolidated towards recent ranges. Other data overnight pressured the buck lower, but couldn't push it overboard as Secretary of the Treasury in the U.S. Tim Geithner was due to testify on Capitol Hill regarding the TARP program. After his testimony, the equity markets kept recent gains and ended up closing the day higher. We keep talking about the equity markets because the current theme is risk. When equity markets rise, traders are taking more risk by putting their cash into other asset classes. During risk aversion, traders take the money out of assets like stocks and either keep it as cash or put the money into gold, which we would like to mention is now near the $1,000 level. So in order to remain ahead of the equity curve, we must understand that how this impacts the currency markets. So we remain focused on the equity markets as well as the currency major pairs. Now we're going to cover the support and resistance levels. Looking at the euro dollar on the daily, currently trading at 145.84. We bounced off the 146 level, tested that earlier in the day yesterday. Unfortunately, ended up closing higher, but below the 146 mark. Ahead of Friday, with not so much data coming out, we anticipate either to remain within a cent range on the euro, or perhaps continue heading higher. First level of resistance is going to be found at 146 even, followed by 146.80, 147.12, and 147.75 above that. First area of support for the euro is going to be found at 145.33, followed by 144.50, 144 even, 143.50, and 143 even. Moving on to the pound, currently trading at 166.53. First area of resistance is going to be found at 167, followed by 167.80. Above that, we have 169 and 170 even. First area of support for the pound is going to be found at 166, followed by 164.80, 164.20, 63.20, and 62.81. Since we only do 5 levels of resistance, I'm going to mention that we also have the 61.50 level. To make this the number 5 level of resistance, what we're going to do is we're going to consolidate 1.6281 and 163.20 and call that 163 even. Next up is the dollar yen. Currently trading at 91.73. Equity markets continue climbing, yet the dollar continues to lose ground. This is an interesting revelation, as we've seen over the last couple of days. That has been the trend. We'd like to see how this develops further, and perhaps this may lead to a few potential trade opportunities that we're going to cover in our members section. Currently trading at 91.74. First area of support for the dollar is going to be found at 91.60, followed by 91.40. Below that, we have 90.90. and 89.82. Below 89.82, we have 88.57. First area of resistance for the dollar-yen pair is going to be found at 92, 92.20, followed by 92.80, 93.25, 92.27 and 93.80. The 92.20 and the 92 area may be one level of resistance. So as we recall, these 20 pips plus or minus typically can go both ways, but consider anything between 92.20 and 92 as an area of resistance. Finally, we have the dollar Swissy, currently trading at 103.82. A pair continues to go lower. We mentioned that there's not much room to the downside as far as the areas of support. We've gone back to last summer to find these areas of support. First area is going to be found at 103.64. This was yesterday's low, followed by 103.15. 102.30 is the final area of support. We don't anticipate much of a decline here. If it does, we're going to look at 103 as a major area of resistance, major area of support for the dollar. So at this time, with not much data coming out tomorrow, we again anticipate some sort of a consolidation within recent ranges. If anything, specifically against the dollar and the pound, we look forward to seeing a continued increase in the exchange rates, further dollar losses if not a consolidation. So if you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kazmark for the FXEdge.com free daily Forex video for September 11th, 2009. Until tomorrow, good luck trading.